We've brushed on that a little bit at the beginning, but I want to go a little bit more in detail about that. It is the different categories. In PulseTrack, we have all of those categories of the mutual fund at the bottom of the screen. Here, they are in the screener. If you don't show the screener, you will not be able to categorize your mutual fund. And I just want to show you a little bit of the category so you know a little bit more your way around. So under balanced fund, you have many balanced fund and they are all in the same thing, but they are all pretty different. You have the Canadian, the three different Canadian with neutral being 50-50, fixed income with a tendency of 60% or more into fixed income and less into equity. And you have Canadian equity balance. It is exactly the opposite, more of a 60% or more of equity and less of fixed income. Of course, they don't compare them within each other because have a very different level of return and risk. Same can be said about the global, neutral, fixed, and equity. And then you have a tactical, which is you can do whatever you want. It should always, I think it should always be that way. But so you have those balanced funds. You have commodity. We don't go there very, very often. There is not that many commodity funds. Right now, it's some gold bullions and all the same. So you have, I think, 3 companies and 3 funds, if just for the fun, in 2 minutes. So you have 8 funds, and when you take all of the noise out, you just have like 8 funds. Not a very big category. Equity, that is the biggest one and the most interesting. So you have Asia, Pacific, you have Canadian, and Canadian is more complicated. You have focus equity, focus small mid, and small mid cap equity Canadian, and Canadian focus. So Canadian equity and Canadian focus, the nuance is that Canadian equity, it's 90% of the fund is in equity, and of that 90% and more is in Canadian equity. So it's 81 to 90% of equity, Canadian equity. Canadian focus, it has to be 50% and more of Canadian. So it can be 51% Canadian and it can be 40% US or elsewhere. So it's more of a balanced equity fund. And it was back in the day when the RSP would have like that 30% of limited content of foreign content, but it does not exist anymore. But the legacy funds still exist, so they make a difference between the two, but it is still Canadian equity. You have energy, financial services, geographic equity, global, and Greater China, international resources, North America, real estate sector. You have U.S. equity, of course, and U.S. mid cap. So the equity is the biggest of the categories. You have fixed income, again, a lot of nuance of Canadian, long-term, short-term, floating rates, and high yield, preferred share fixed income, and you can just choose the one. And you see on preferred share we have just 15 different funds, so those categories are not that big. And then you have money market, yeah, it's dying. And then you have a specialty, alternative strategy and stuff like that. There is not a lot of, not so bad. So the alternative strategy here, and target date, which are balanced fund, but with an objective of a target date for the retirement and to take the money out of the fund. So these are the different category that you can choose from the screener. They are not at the bottom anymore. They are right there.